Coming up on show 764, Tesla's Q1 2020 earnings. The headline is more profit. Stick around and I'll tell you more. We get an update on the Model Y, talking about a teardown of the car as well, how the Model 3 is number one in Europe, and the EPA denying Musk's claims over range. It's all kicking off today. Well, good morning, good afternoon, or good evening, wherever you're listening in the world. Welcome to EV News Daily. This is what happened on Thursday, 30th of April. My name is Martyn Lee. Go through every EV story so you don't have to. I'm just getting through a little backlog of shows that I've had written and not had a chance to come out here and record, so thank you for your patience in letting me drop a few shows at the same time. So Tesla released their Q1 2020 earnings report, and for the first time ever, they reported a profit in Q1, the first 3 months of the year, quarter one. The main financial details from the report are that they had revenue of $5.985 billion and a profit of 9 cents per share. Now, that doesn't sound too much, does it? 9 cents a share, but, well, they were forecast, well, at least by the so-called experts, to be losing a lot of money this quarter. Where should we start? Oh, look, everyone wants to know about the Model Y. We'll start there. In early Q1, they say, this is their report speaking, not me. In early Q1, we began production of Model Y in Fremont using a combination of new production lines as well as shared capacity with Model 3. Our simplified and scalable approach to manufacturing is starting to take effect. We were able to build more Model Y vehicles in its first quarter of production than in the first 2 quarters of Model 3 in 2017. Model Y production also exceeded the first quarter of production of Model 3 in Shanghai, demonstrating continued improvements in program execution. Additionally, we achieved positive gross margin for Model Y in its first production quarter. Fantastic news there. And just a sign that they learn from every car they build. By the sounds of it, it makes the machine just that little bit better, but you add it all up, those iterative gains, and the Model Y is certainly off to a flying start. What about revenue? Well, they say that in Q1 we reached our highest ever revenue for a seasonally slower first quarter, as our total revenue grew 32% year on year. Sequentially, our revenue was mainly impacted by lower deliveries, driven primarily by limitations on our ability to deliver vehicles towards the end of the quarter. They do not say the word coronavirus here. As expected, our average selling price declined further as our mix continues to shift from Model S and X to the more affordable 3 and Y. Well, Tesla's net income was small, $16 million. And when you talk about a revenue of $6 billion, yes, $16 million is somewhat of a rounding error. Revenue for the quarter was $6 billion, like I say, higher than $5.8 billion that was expected. A slight loss, actually still down 19% from the previous quarter. While those financials revealed in their Q1 report, and their first ever Q1 profit, they're a surprise to Wall Street. They were a surprise to many people. Many of the numbers found on the rest of Tesla's report, which precedes a quarterly call with analysts, which came a few moments later, it closely followed what had been reported. Despite the shutdowns, yes, again, they didn't mention the word coronavirus, they had their best Q1 ever in terms of vehicles produced, says the website Green Car Reports. On a 12-month trailing basis, Tesla claims its deliveries are nearly 400,000, reflecting its strong growth in 2019. And it noted that installed capacity at their Fremont factory will extend to 500,000 cars this year. Note the phrase, the installed capacity. So they're able to make that many cars. Let's see how many they make. Tesla also revealed it achieved positive gross margin for the Model Y in its first production quarter, and that's a very big deal. In other words, the Model Y is making the money. That's a first. That's a first for any model coming out of Tesla. At an early stage, Model Y deliveries from the company's Gigafactory Berlin are anticipated in 2021, and Tesla also plans to eventually make Model Y in Shanghai. Well, let's look at Tesla's situation in cash. They're sitting on $8.1 billion in cash. That is a nice balance in the old savings account, isn't it? $8.1 billion keeps the bank manager happy. That will certainly help the company weather the effect of the pandemic. Tesla Model Y production outpacing the initial ramp of the made-in-China Model 3, notes Teslarati. That's a notable feat considering that Tesla's Chinese Model 3 ramp was already quicker than the company could do anywhere else in their history. And Teslarati say that Elon did admit he is a bit worried about the Fremont factory's ongoing shutdown. He reiterated his recent controversial points on Twitter, criticizing the ongoing lockdown procedures in the Bay Area. He did state that it's not only Tesla at risk with the ongoing shutdown, as other companies are also in this crisis now. Depending on what website you read, Elon had a total and utter meltdown on the call. Others reporting it as, well, he was just a bit miffed and he got a few things off his chest. He would like to see the factory open as soon as is safe, and that includes new working conditions and safety protocols and procedures. But whilst at state or even federal level decisions are being made which are out of his hands, he doesn't seem very happy about it. It is an interesting situation, from my perspective and just my opinion, when a multi-billionaire can't get his own way, how he chooses to express himself, the choice of words that he uses, and people in that position, people are like, Elon was shooting from the hip and was saying stuff on Twitter, and he ought to be careful what he says. Look, nobody in Elon's position says anything without having an effect in mind. It was no accident what he said and how he said it. It's just interesting that he chose to express himself that way with that choice of words. And a quickie on the financials from Electrek. Fred's take is that it was a surprise little profit. Yes, little being the definitive word there, but a profit's a profit. And you know what? If it had been minus $1 negative, that's all the headlines would have said. Just the fact that it's $1 in the black means that the positive headlines can run with the word profit in Q1 for the very first time. Look, the best news, says Fred, is the results show that the automotive gross margin, so the money they're making from the cars, is 25.5%, an even positive gross margin on the Model Y. Very impressive results. As for the bad news, negative cash flow, which was to be expected because they made about 15,000 cars they couldn't deliver at the end of the quarter due to limited operations amidst shelter in place. Their inventory, therefore, will be increased significantly. Okay, let's move on and let's talk about a story on Inside EVs where they were trying to crunch the numbers and work out by way of presenting the market potential for Model Y, Tesla did a little graph to show how big the Model Y could be, but in doing so, by charting the Model 3 figures on the graph, it's not a number that I've ever seen them say publicly, and Inside EVs have kind of reverse engineered the graph to show that, maybe unknowingly, Tesla, through this data about the Model Y, shows that the Q1 financial report, in the financial report in Q1, it shows that during the last 4 quarters, so quarter 2, quarter 3, quarter 4, quarter 1, a rolling year if you like, they delivered 150,000, just under 150,000 Model 3s in the US. Now, these are US figures only, by the way, taking into consideration previous data released by Tesla and other sources. Inside EV's estimations assume that Model 3 sales in the US were 18,000 in the first quarter. Now, that's not Tesla saying that. That is an estimation by Inside EVs. 20% down year over year. Sales of the Model Y, which started in March, are estimated to be above 3,000. Again, not a number that we were told. Maybe 3,500, could be 4,000. Tesla also wrote that we were able to build more Model Y vehicles in the first quarter of production than the first 2 quarters of Model 3. Well, that number is 2,685, so well above 2,685, above 3,000. Some people saying 3.5, maybe even 4,000 Tesla Model Ys in the first quarter. A fantastic result. From the USA to Europe, the European passenger plug-in market had 84,000 registrations in March of this year. That's up year over year, 41%. A great performance considering the effect that total lockdowns across Europe have had. Furthermore, this is while the overall auto market crashed in Europe, inflating the relative plug-in vehicle share to almost 10% across Europe. Amazing. Okay. there's almost no way that you can read into any of this data because people weren't delivering cars or different countries were shutting down, but still 10% of new car sales EV. We'll take it. 6% fully electric, by the way, says Clean Technica. The usual end of quarter flood came for Tesla. 16,121 deliveries of the Model 3, and that was a record figure, by the way. They were the rabbit out of the Tesla's hat last month was the UK. They were saving up some UK deliveries and registrations at 4,718 in March, which was amazing. Not the only 4-digit performance, though. Over 2,000 in Germany, almost 1,500 in France, new record there. 1,300 in the Netherlands, over 1,000 in Sweden. Have a look at Jose Pontes's EV sales blog for more. How about tearing down cars? Well, Tesla says the Model 3 has 70 stamped parts for the rear underbody, and it also confirms the Model Y has only castings for that structure. So after Sandy Munro's been taking one apart, they actually talked about it in their letter to investors. It's possibly because the company doesn't consider the bracket that joins the two castings together as a part. They only named 2 parts, but still, maybe it's 2, maybe it's 3. It's a lot less than 70, and it's a cast part as well. Reports Inside EVs. The promise contained in the Q1 update is the 2 castings will be a single piece eventually, and it's going to take a huge machine, the size of a house, to make that. Sandy Munro mentioned in a recent video that Elon Musk is also promising that the rear end of the Model Y, maybe that means Model 3, I don't know, I'm speculating here, could also go that way. Get rid of 70 different parts they have to bolt together. One single cast part at the rear end. They are just getting so much better at making cars. Well, the Environmental Protection Agency has just rebuffed comments from Elon Musk made concerning what he calls an error during the Model S long-range testing process, which Elon says cost the car an official 400-mile range. What is this all about? Well, the Environmental Protection Agency has just told Roadshow it conducted the testing properly. According to CNET, Elon Musk said the Model S long range should have an official figure of 400 miles of range, but instead, the EPA gave it 391. Why did they miss out on 9 miles? According to Elon, Tesla have gone back and looked at the data of the car they gave to the EPA. At some point during the testing process, somebody left the keys inside the car overnight. So the key was left inside the Tesla overnight. The door was open as well, the sensors tell them. And that means that a Model S sits in a kind of mode called waiting for driver mode. It doesn't power down the car. And overnight, that will deplete about 2% of the EV range. Yep, that's enough to knock 9 miles off. And that would have given the car, if they'd locked it up completely and closed the door, a 400-mile rating. EPA totally denies it. Tesla have the data. This one's going to rumble on. And finally, Tesla has confirmed it's going to offer full self-driving as a subscription service. Goodness, on any other day, this would be a headline story. It's huge news. You should brace yourself for the price, though, says Electrek. Elon Musk said, I think we will offer full self-driving as a subscription service, but it will be towards the end of the year. I should say it will make sense to buy full self-driving as an option. In our view, buying is an investment in the future, and we are confident it's an investment that will pay off to the customer to the benefit of the consumer. In my opinion, buying full self-driving option is something people will not regret doing, he says. Well, look, if you take what full self-driving costs, take your $7,000 and amortize that over the time that you'll own the car or lease the car maybe, you're working out on, for the time that you have the car, probably paying around $100 a month for the benefit of having full self-driving. So as a subscription service, so if you have a Tesla and you only want it for a month of the year that you are doing some road trips in, then, well, more than $100, because otherwise it would make sense just to have it as a subscription service as you would Spotify or Netflix. Question of the week. On Sunday night, I'll be reading out what people think their favourite car is, they've owned or do own, that should be converted to an EV. Email me about anything you like anytime. My email address is hello@evnewsdaily.com, or leave a comment on the YouTube show. There are 233 patrons of the show that keep us going. Thank you very much to those people. And my premium partners, Phil Roberts of Electric Future, Brad Crosby, Avid Technology, Brightsmith Group for Clean Tech Talent, Porsche of the Village, Cincinnati, and Audi of Cincinnati East. Come and say hi. In the meantime, you find me on social media. Have a wonderful day. I'll catch you tomorrow. And remember, there is no such thing as a self-charging hybrid.